is expected to be the month for the completion of Facebook's IPO, but recent activities from the social network indicate that the sale could be delayed until June. Facebook's surprise decision to acquire Instagram for $1 billion over the course of a weekend and its $550 million patent transaction with Microsoft, as well as other distractions, have taken the company's focus away from preparing for its IPO. And as a result, many analysts are questioning whether or not Mark Zuckerberg is ready to go public and face both the market and investors. Furthermore, many are wondering if he even really cares about making money. So to help us answer these questions and others, we're going to bring in Vitaliy Katsenelson, the Chief Investment Officer at Investment Management Associates. Thanks for joining us today, Vitaliy.
It's my pleasure. Thank you.
Great. Well, let's start by getting into some of the company's recent actions. Should Facebook have bought Instagram and right before its IPO?
Well, the decision to buy them, that's not an issue. It's the paying $1 billion for them. You see, they basically paid $1 billion for a company that has 12 employees, has no revenues, and with the exception of bringing 30 million users that are not part of a network, it's just part of the users of the software, it doesn't really bring much to them. In other words, it has Instagram has very nice, cute filters for the iPhone and Android, etc. But $1 billion, if they spend $50 million for that, you would say, okay, maybe. But $1 billion, when you spend $1 billion for this, it basically you're paying with funny money. The valuation, the investors have put in on Facebook, $100 billion valuation, basically makes it's paying basically with inflated money. Therefore, they can they could have paid $2 billion, and it would have been as ridiculous as $1 billion or even $500 million. It would still be insane valuation for what they did.
Right. Well, in terms of the patent deal the company made with Microsoft, it's clear that the company is facing needs to protect its intellectual property, especially in light of the Yahoo lawsuit against it. But again, was the timing bad for this?
Well, I think it does. It's not in the long run. It's really not going to matter when they go public. So from that perspective, that doesn't matter. Buying patents, I guess, if you live in a world where you have to, it's like when you buy patents, you basically try to defend yourself from other people attacking you. So that's just, I guess, course of doing business. When Facebook goes public, it's irrelevant, really. In the long run, it's not going to matter.
All right. Well, what about the $100 billion valuation for the company? Multiple analysts have said that it's too high. So what's your take?
I think it's a very high, and to put its valuation in the context, let's look at another small company, Google. Google has $40 billion of revenues. It has valuation of $200 billion, and it has $40 billion of cash. So in other words, for 2 Facebooks, you can get 1 Google. But Google is a real company. Facebook is a real company, but Google has $40 billion of revenues, and Facebook has revenues of only $4 billion. Facebook has to basically grow its revenue 10 times to Google's level for you to basically double your money. And I'd argue that it's basically priced for perfection. And there's a very good purpose. I'm a value investor. As a value investor, basically, there is zero margin of safety. In other words, in the short run, when Facebook goes public, it's one of those oceanfront property that's very unique and everybody wants to own it. But you know what? That only lasts for a few months, maybe 6 months. After a while, investors are going to start looking at it not as a speculation, not as this kind of prized asset, but as a business that generates cash flows, etc. When this honeymoon phase ends, it's going to come back to earth, and there was a very good chance that it's not going to be a good investment, at least at $100 billion valuation.
What should the valuation be, in your opinion?
The problem is, I don't know. And that's because it's too difficult to say. We don't have enough information first. And second of all, there is a Fed element in what Facebook does. In other words, yes, we're gonna have social networks going in our life. That's a given. But the amount of time we spend on Facebook, there is maybe a Fed element in that. In other words, maybe that will decline as time goes by because we'll just get annoyed and we'll find better things to do. And we may have another new pastime develop that we just don't know about yet. There's only so many ads you can serve people on the Facebook before they get sick of them. Right. So I don't know. I really don't know. And the good thing about investing is that You need to own maybe just a few dozen stocks, 20, 30 stocks, and I don't have to own Facebook. And I say, you know what, I cannot figure out what it's worth, and therefore I'll just stay away from it and look at something else.
Right. Well, as I said earlier, there has been a lot of concern about Mark Zuckerberg's lack of concern for making money. Well, do you think that this is true, first of all? And if it is, how big of a problem is it going forward?
Well, I mean, it's a for-profit enterprise. And when you buy Facebook, you basically buy a for-profit enterprise. I mean, I guess there is a difference of not being focused on short-term and just focusing on the long run. In other words, he may be foregoing some short-term profits for the future. That's fine. There's absolutely no problem with that. Okay, but if you're a shareholder of Facebook, you do want them to be concerned about profitability, at least in the long run. Okay, so in other words, if you see a project that in the short run will bleed a lot of money, okay, but it's going to make you a lot of money in the long run, that's okay. Okay, but I want him to think about long-term profitability. If he doesn't, then I would just run. I would not touch the stock.
Okay. Well, and the other issue with him is the unilateral power that he has to make decisions, such as the purchase of Instagram. So how will this model work once the company goes public?
Well, he's kind of a benevolent dictator, basically, right? So it's he's a dictator, right? And we don't know how good he is yet. Okay, so if I guess absolute power corrupts absolutely. So if you think he's on your side, if you think he cares about creating shareholder value in the long run, I mean, I don't like that, but I can live with that. But if you think he just he cares about other things and profitability is irrelevant, then you have a dictator that's not on your side. So that's why in a normal environment we have check and balances and we have a board of directors that can veto your decisions, etc. And it seems that he just spent $1 billion and didn't care to ask his board or what is get approved from the board. So I'd be cautious. So there are a lot of things about Facebook we just don't know yet. And $100 billion valuation basically says this is a perfect company. This is a company that will increase its revenues, 5-fold over the next many years, and you basically have to buy into that. And the problem is, if it fails marginally, then it's not going to be a good investment in the long run.
Right. Well, this shift in power that Zuckerberg has, we've also seen it with Google and Zynga and others. So what impact will this ultimately have not only on these businesses, but also the market?
Well, I think what it may do, investors may end up willing to pay lower multiples for these businesses. In other words, if Google had a normal governance, let's say market would put, 17, 18 times earnings, okay? But because of what they just did, by basically taking control of the company, then they already controlled a lot of shares. Now they can have even larger control. Market may say, you know what? Maybe we want to have a 20-30% discount to a normal, to normal valuation. And I think that's what may happen. I think they may be trading at a discount. And by the way, as a value investor, when I look at Google and I see what they did, I say, well, you know what? It's a great business, but I want to have high margin of safety. So I think that's what's going to happen.
Well, in a piece that you wrote not long ago, you suggested that the valuations of several recent IPOs looked, as you called it, bubbly. So does this mean that we're approaching a bubble?
I think we're in the midst of it for sure. The question, the problem is bubbles. They tend to get bigger, before they pop. So if you look at a lot of companies like Angie's List or Yelp, some of them actually, fairly good businesses, but the valuations are, they trade at 5 or 8 or 10 times revenues, and some of them may survive, some of them may not. I mean, Zynga is down 40% in a few weeks, and it's still not cheap. So we are I think what happens is this: when you say the word social network, the way we analyze the stocks changes. We become a lot more forgiving and a lot less critical. So, and I think that's reflected in the valuation. So, as an investor, you're going to have opportunity to own them most likely at the lower prices, but it's going to require some patience.
All right. Well, we'll see what happens. Vitaliy, thank you so much for talking with us. We really appreciate it.
My pleasure. Thank you very much.
You're welcome. Reporting for WebPro News, I'm Abby Johnson.